Well, hello and welcome to another episode of the Lending Podcast. We are your hosts. I'm John Burnham along with Jeff Jones.
Hello, hello.
Happy New Year 2025.
So exciting.
It's crazy.
It's going to be a good year.
It is going to be a good year. Yeah, we've talked about it. There's a lot of opportunity out there. A lot of loan programs that have emerged to help buyers buy more homes in Texas, in the U.S. Of course, we're here in Austin, Texas, and licensed anywhere in the great state of Texas. And we're going to talk about some of those loan programs today.
We are. Before we do that, I just want to give a big gratitude shout out for any listeners out there. We had our first year of 2024. We put 52 episodes in the books.
Yes, we did.
And so thank you so much if you've been listening to us from the beginning. Hopefully we look back on this time when we're on our 1000th episode and we're like, man, remember when we started this? Right. So now this is year 2. And there's got a lot of good stuff coming down for year 2. We're going to start getting some interviews going. As you know, we haven't done those yet. So we're going to up our equipment game. We've spent some more money on production. And we're excited about what this year has for this podcast. So
that's right.
I hope people out there have some great anticipation that good things are to come. Also, if you are in the home ownership business in any kind of form, please contact us. We'd love to consider you for an interview to be on here. So that would be great.
There's so many related industries, so many of our trusted partners that we work with on a daily basis, on a weekly basis that help provide such value to our clients. So we're grateful for you as a referral partner, as a business partner, our clients. And this is, my 24th year of doing this. That's it.
Oh, man.
2001.
See, I got to figure out how many years mine is. I think I'm 5th.
5, 6.
Well, yeah, I got licensed in whatever that was, 2019.
2019. So this is the 6th year. So that combined 30 years. But it was like end
of 2019.
That's okay.
So if I say 6, I feel like I'm stretching that 5 to the
maybe we're rounding up a little bit.
I'm rounding way up.
Rounding up a hair.
Yeah.
A combined almost 30 years of experience.
But I had a lot of, when I ran nonprofits, we were doing home loans.
That's right.
So we actually set up a community loan fund. The IRS lets nonprofits do a handful of home loans before they have to get registered for legitimacy.
It's 5. Is it 5?
5 in a 3-year program.
Okay.
Which is kind of odd how they count that. I don't know why they just don't give you a solid number a year, but they do they look at a 5-year window.
So you had some background, you had some experience before you actually got your license.
Yeah, and I used to work for Geico in the homeowners department, so I was one of their analysts. So, but yeah, home ownership, and then I was a lender. I was a registered general contractor. We don't have to be licensed in Texas as a general contractor. Do not have to be
licensed to be a GC.
Drives me crazy because there's a lot of bad GCs out there. I'm finding out because they're licensed. They're not licensed.
It'd be a whole other podcast.
But in New York, we had to be licensed.
Yeah, that makes sense. I think we should in Texas too.
Yeah.
Well, let's dive in.
Wow, that was a good segue. So, what are we talking about today, JB?
Well, we're going to talk about a foreign national program, a true foreign national program where you do not have to reside in the U.S., you do not have to work in the U.S., you do not have to have U.S. credit to purchase property in the U.S. And the inspiration, I would say, for this podcast, we've known about this program. We've always kind of had this program for the last decade or so. In the last week, I've had 3 conversations with Canadian citizens who want to buy in the U.S., specifically in Texas. I'm sure they're buying in other parts of the country as well.
No way.
But Canadian citizens own businesses in Canada or work in Canada, live in Canada, 0 U.S. credit, and want to buy property here. And the question is, can I do it? And the answer is yes.
I blame Ryan Reynolds for this inflow. No, a
lot of good Canadians.
A lot of great Canadians.
We love our neighbors.
You know what's interesting? Obviously, it's been a lot of news with Canada right now, with their prime minister resigning. But I think that this is going to be a growing question that we're going to continue to get over this next year.
For sure. As
people that are not U.S. citizens, and they don't have U.S. credentials, they don't have visas, they don't have a green card because you're not permanent resident.
That's right.
Or non-perm resident. You just want to investigate what is it like to use my money and buy property in the U.S. And what is amazing about our country, there's a lot of great things about the U.S. One of them is, what we're talking about is you don't have to be a citizen to buy property here.
That's right.
A lot of countries just don't allow that. It's like if you are not a citizen, you can't buy property. If you don't have a permanent residency, you can't buy property. I might go out on a limb and say the majority of countries in the world don't let you do that.
Correct.
We let you do that in the U.S. So, so it's very open for that. And so I'm glad we're talking about it because it's a navigation of questions. So one of the things we love is scenarios, right? And so if you are out there and you're listening to this podcast and you don't live in the U.S. and you're like, hey, I wonder what the market's like in Texas or Austin, Texas, or, Galveston, Texas, or wherever it might, Corpus Christi or Dallas, I hear those are good investments. We'd love to talk to you because it's a scenario-based conversation. And so let's go over what this looks like for somebody.
Yeah, and when I recently read an article, 6 of the top 10 fastest growing zip codes in the country are in Texas.
6 out of 10.
6 out of 10. One of them is actually Kyle, which is south of Austin, about 10, 15
like 10
miles
minutes from my house.
Right by you. They're number 10 out of 10.
That has been booming.
There were a couple in the Houston area, West Houston, which is Katy, Texas. There's some in the Dallas area, San Antonio area. So Texas is growing, of course. Austin proper, we felt like maybe we had a little bit of our boom in 20 and 21 and 22, and we've maybe pulled back a little bit in Central Austin. But the growth outside of Austin has been astronomical, and Kyle included, right?
Well,
these
affordability, right? So affordability, like when we bought 6 years ago, you were the loan officer.
Shout out to my team.
Yeah, I worked a miracle we bought in a town called Buda, which is the town just south of Austin, right? And the funny thing is we're in a different county. So we're in Hayes County instead of Travis County. But I drive up to Austin. It takes me 29 minutes to get to the office here. If I want to go to South Austin, it takes me 15 minutes. So I'm super close. And then Kyle's just south of us. But when I wanted to buy a house under $300,000 6 years ago.
Yeah. And
you couldn't find that in the city limits of Austin. So that search produced none.
Right.
And then Buda, Kyle, San Marcos were populated with those numbers under 300,000. Buda, it's really difficult to find anything under 300. But Kyle still has that price point available in many areas. And a lot of them are new builds. So
they're new builds.
They're pretty solid.
Beautiful area, and it is well situated, and there's easy access to the tollway, which now goes north and south, just east of I-35 in Austin. So anyway, we're getting off, but back to this Ford national program. Bottom line is a lot of growth in Texas, a lot of growth in lots of parts of the U.S., and we're here in Central Texas. So let's talk. Before we go into the specifics on the Ford national program, I want to make a distinction. There's kind of 5 categories of buyers out there. Okay, you have a U.S. citizen, you have a permanent resident, a non-permanent resident, and then a DACA program, which is Deferred Action for Childhood Arrivals. That DACA program's been around for a long time. Those DACA holders are now eligible for financing. They weren't as of about a decade ago, and then some laws changed. And then a true foreign national. And so as we're talking to folks, they may not always know what category they fit into. If the non-permanent resident, as an example, is you may live in the U.S. and work in the U.S. With a work visa, but you might not have established a lot of U.S. credit yet, right? So, but you live here legally, you work here legally, and you hold a permanent, a work visa, which gives you a non-permanent status. A permanent resident is a green card holder, right? We know what a U.S. citizen is. You're born here legally in the U.S. And the Foreign National Program is something that really we've seen, obviously had a few conversations on recently. And if you live outside the U.S. and you work outside the U.S. and you don't have U.S. credit, you might be thinking to yourself, I can't do this. And you just touched on that.
Yes, you can.
That you can. You absolutely can. So let's run through a few of the parameters, and then we'll kind of go back and forth on maybe some pros and cons, for this program. And first of all, it's going to take about 30% down. Okay, so you live outside the U.S., you want to purchase property in the U.S., and you don't have U.S. credit, it's minimum 30% down.
Right.
Okay, there may be some 25% programs out there. A couple of the banks we work with, the programs that we know the best are 30% down or more. Again, I'm not saying that's blanket across the board. There might be a unicorn out there. But typically speaking, I'd be prepared for 30% down. You do not have to have U.S. credit. We will pull an international credit report. There is such a thing.
Yeah.
Yeah. And
which scares people, by the way. It's like, there's a what?
That's right.
International credit report.
Yeah. Now, here's how we're underwriting these loans typically is these are all investment property purchases. So you are not purchasing a property
Because you don't
in the
live
U.S.
here,
to live
obviously.
here. You don't live here. You know, we know you're not going to move here right away. If you are moving here right away, you're going to occupy the property. That's a whole nother conversation, right? But these are designed for investment property purchases. And you can buy these homes in an LLC. We touched on this a little. You know, there's pros and cons. There's really not a whole lot of cons to buying a property in an LLC. I would encourage it. I think you would agree with that.
You know, first of all, we are loan specialists, loan officers, so we can't give legal advice. But in most cases, if you're buying an investment property as a foreign national, the majority of the time they set up an LLC in that state that they're buying the property in. Okay, and the reason is very simple. You know, you want to keep your personal and your business money and liabilities separate, right? And so if you're buying an investment property, you're running it as a business technically, right? So why not just separate those legally? So you open and an LLC in America. Feel free to do your own research and do a deeper dive into it. But a lot of people or open an LLC for each property of their investment. That way, if something goes wrong, a lawsuit happens, a huge liability event occurs, that property is covered by its own legal entity. It doesn't fall on you. And so it's just a huge cushion of liability to have an LLC under an investment property. So
and it's not expensive to form an LLC.
it's
$400 or
not, you know,
$500.
LegalZoom, Zen Business, I'm a friend of $300. There's other fees involved, but that's just a form. Then you get your EIN, then you open up your business bank account, and you're rolling. And you can do all that within the window of your closing. So a lot of people will put offers in, get under contract, and then open their LLC. And a lot of times, what's funny is they open the LLC in the name of the address.
Yes. Yeah. It's 123 Main Street LLC
right.
or
123 Main Street LLC.
Yeah.
So we see that a lot, which is cute. So I'm a huge fan of LLCs because the loan programs are a little bit simpler, but it can be personal. So a lot of that goes back into the conversation. You want to have a good loan specialist to have that conversation with is, are you going to LLC or not to LLC? That is the question, right? So because that drives our direction of programs.
Exactly. And the nice thing to know is that it is a possibility. It is eligible. Most traditional 30-year fixed vanilla home financing, you cannot do an LLC for those loans. Owner-occupied second homes, obviously, you're not going to put in an LLC. You might put in a trust. And there's land trusts and property trusts, and we won't get into that right now. But there's a lot of different things you can talk to your personal estate planner, your attorney, your CPA about the structure.
And there still are 30-year payment programs, even 40-year terms for LLCs. So it's not like your monthly payment's going to be way higher because it's a shortened term.
That's right.
A 10-year term. No, we can do a 30-year amortization on that.
Yeah. And let's kind of talk about how we underwrite these, right?
Yeah.
So an individual lives abroad, they work abroad, no U.S. credit, they're buying a property in the U.S. How do we underwrite these files, right? Like we're not looking at tax returns, we're not looking at W-2s and income. So the way we do it is something called a debt service coverage ratio factor, okay? And we've talked a little bit about DSCR loans before on one of our previous episodes, but specifically that DSCR program, debt service coverage ratio, is looking at the payment of the property that you're buying and the potential rental income of the property that you're buying based on market average rent statistics, right? So the appraisal is going to dictate, okay, the property rents for $3,000 a month, the payment on the property is $3,000 a month. I'm just making numbers up. That's a 1-to-1 ratio. That works. That's a smiley face, and we would be able to close.
Can I put a pause on something that you said that's really important?
Yeah.
When we do the upfront, like pre-approval, so to speak, The DSCR is what you're talking about. The debt. Oh my gosh, debt service coverage ratio.
Yeah.
I was going to reverse the number. That rent number is the critical number,
Yes.
right? Because your rent has to cover the mortgage. And so the number we put in our preliminaries, we're assuming the appraiser is going to validate those numbers. So the appraiser actually gives us the final number.
That's right. And good to know. And we lean on our buyer's agent, our real estate agent, to pull some rental comparables in the area and figure out, okay, we think this one's renting for $2,800, that one's $3,200, and we can kind of do an average and figure it out. Now, we're not really, to your point, we're not really pre-approving you for a specific loan amount. We're pre-approving you for the debt coverage. So these loan amounts go to up to $1.5 million. So if you got a property that's going to rent for $10,000 a month, and the mortgage that you're taking out and the taxes and insurance supports that, those numbers are equal. That may work even at a huge loan amount.
So here's a fun question. Maybe we'll try to stump you a little bit. And I already know you. So can I get pre-approved for a DSCR loan, or is the pre-approval on the property itself?
You can get approved for a DSCR, but the approval is really on the property. I mean, I can say, look, you're pre-approved based on because we're going to verify assets. This is really back to verifying assets, probably more than anything initially. That's really all we have. So you bank with Royal Bank of Canada and you've got X amount of dollars in your bank.
Right. We're
going to see those assets. We're going to see your international credit report. We're going to know that you can qualify to at least put the money down. Now we're putting the onus on the buyer's agent and the buyer to find the right property that's going to cash flow.
So I think that's critical, because the pre-approval has a different angle to it.
Yeah.
It has I issued a pre-approval for a DSCR loan, and I made it very clear upfront to the realtor and the buyer that this is highly conditional, that rent values make the coverage of at least a 1.0 coverage.
Yeah.
Otherwise, it's not a pre-approval, because like you said, the property has to basically be approved.
And then the factor to get the ratios in line might be a little more down payment. So, hey, I can put 35%, I can put 40% down. Cool. Or maybe we're buying the interest rate down. We're getting that payment down, shopping insurance, et cetera. One of the interesting things about property taxes in Central Texas is that we as homeowners, have homestead exemptions. Second homes and investment properties do not have those same kind of exemptions. So our taxes tend to be a little higher on those investment properties. That's part of your payment. Even if you're not escrowing your taxes and your insurance with your payment, we're qualifying you with your principal, interest, mortgage, plus your homeowner's insurance, plus your taxes, plus HOA dues, and maybe flood insurance if your property's in a flood zone. So there's a lot of factors in addition to your mortgage, your P&I, principal and interest, that factors into that qualification payment, which we then look at rental income, mesh those together and make sure that it works, right?
I like that, and I'm glad that you brought up the taxes, because that is, especially when it gets closer to the end of the year, that gets to be a huge headache to forecast the actual taxes without any exemptions that are showing on it currently.
Yep.
And so that throws off the equation when you get a surprise of property tax that goes through the roof.
Yeah, and let's say that the owner of the property that you're trying to buy is a homestead. They live there, and let's say they're over 65. They have the senior exemption, the over 65 exemption. That may bring their taxes down by half. Right. So property taxes might be $5,000, and you're looking at this property thinking, "Oh, cool, the taxes are only $5,000." Really, they're 10, because as soon as you buy it, those exemptions on the current house are going to be lifted. You're not going to have any exemptions as the new owner of this investment property, and your property taxes essentially double. Right. But we'll prep you for that. Like, we get the tax certificate from the title company ahead of time. We know that the taxes are really $10,000, not $5,000. We're going to set you up for success on that.
And I think that's critical, is having the lender that knows these things, right? So you can go to, an online pre-approval with some kind of big box lender out there. They're not going to be doing that work for you. They just aren't.
True.
They're not going to be figuring out what will happen with your taxes, what's the forecast when these exemptions fall off for that property.
Yeah,
So
that's true.
just a heads up on that.
And this time of year, in January, we're actually going through right now all of our clients that closed last year and giving them a nudge and making sure that you filed make sure you filed your homestead exemption. It's free to file your homestead exemption. Of course, the program we're talking about is all about investment property, but eventually, that's a good segue. Let's say you buy this investment property, you're a foreign national. Now you buy a property in Texas, and in 4 or 5 years, you want to move into your house. When you establish residency in Texas in that property, you can then file your homestead exemption, which will lower your taxes and probably lower your insurance because you're getting a different kind of insurance. At that point, you're not getting a landlord's policy. So there's a lot of little nuances there. And I think this most recent conversation with my Canadian citizen client, he is thinking down the road 5 years. He's thinking that he may want to set up shop permanently in Texas, and move out of Canada. And so why not buy now? Yes, the interest rates on these programs are probably a little higher than what you'd get if you were owner occupying and, buying a house owner occupied for sure. But if you can establish that ownership now of a property, ride the appreciation over the next 5 years, have a renter, at least cover the mortgage. Maybe it's a little bit of cash flow, but you're getting that appreciation. Someone else is paying the mortgage. And then, hey, if you never move to Texas, if you decide you want to sell the house, you're probably going to have some good appreciation there. You have a little bit of return on your investment. So I think that's where the minds of these couple of recent Canadian citizen conversations have been, is I want to diversify my portfolio. This particular client that I have, he's built a really nice business. He's paid off his house in Canada, and he's thinking, I want to diversify. I've got some cash. What do I do with it? And a good place to put it is Texas real estate.
Yeah. Well, 6 out of 10 of the hottest housing markets are in our state. That's a pretty big deal.
It is.
So we're getting a lot of attention right now. We're here for you. If you're a realtor out there and you're getting leads from people that don't live in the U.S., don't be afraid of them.
That's right.
Have a good lending partner like ourselves that could help you navigate what those pre-approvals look like so that you feel comfortable and confident house shopping with somebody that's not here in the U.S.
That's right.
Because it is very doable.
Yep.
And those programs are pretty solid. They're not strange. They're very common. They've been around for decades. So this is still a good place to buy, even if you don't live here.
Absolutely. It's a really good place to buy. And I think each situation is going to be a little different. We touch on that often. So having the first conversation is so important, finding out the goals of what your client's looking to do. And it might be that they kind of fit into a foreign national situation now, but their company's going to move them to the U.S. They're going to have non-permanent resident status by the time they buy here. They want to buy. So the category could change, right? We talked about the different kind of the sort of 5 categories of citizenship, or U.S. citizen and permanent resident, non-permanent. So if that's going to change over the next year, we want to set them up for success with the best program. And this is available now for someone who does not live here, does not work here, does not have credit here, but they might in the next year, and their category could change, which changes the program and may help their financing terms. So you bet.
Wonderful. I like this episode.
I think it's the first time we've really talked about it.
We've
talked about the DSCR, the debt service coverage ratio, and that's available for investors. That's available today for cash out investments and purchase investment rate and term refinances for investors. This foreign national program is pretty cool. So
so to recap, if you are a non-U.S. citizen, you don't have any U.S. credentials because you don't have visas or green cards. You just would like to own a property that's in America, in Texas, let's say. The question is going to be, do you want to set up an LLC or do you want to do it in your own name? And we go from there, right?
That's right.
And then we do our due diligence of collecting documents, having you fill out the application, looking at assets, verifying assets, and go from there. That's International Credit Pool. That's
International Credit Pool.
Sounds like Interpol,
right?
But it's not.
Right. Exactly. They're not cheap either. The international credit reports are kind of expensive.
Yeah.
Cool. Well, thanks for being with us today. I hope that you gathered a nugget or two, and we're here for you if you have additional questions.
You bet. And please like, subscribe, share the Lending Podcast. Please give us comments of what you'd also like to hear. We appreciate you out there. Take care.
Thanks so much. Take care. Happy New Year.